I'm Armie Lee. Joining me today to talk about family offices' growing allocations to private equity is Irwin Latner, a partner at Pepper Hamilton, who works in the PE and family office area. Irwin, thank you for joining us.
My pleasure, Armie.
So let's start with an overview of family offices, and how many are there globally?
Globally, there are about 10,000 family offices. Most of the families are probably in the United States and Europe, but there's a growing number in Asia and Latin America as well. And family offices are usually formed after a liquidity event, either an IPO or a sale of a business. They are normally either single family offices or multifamily offices that represent not only one family, but multifamily offices. And family offices in general offer a multitude of services, usually focused around an investment platform, but they can also offer tax and accounting, reporting, compliance, budgeting, governance issues if there's disputes, education across generations, philanthropy oversight, which is often very important. So, families tend to perform a multitude of these functions, but every family is different. Some families are organized around maybe investments in private equities, some are public equities, could be real estate, could be real assets or things like that, or direct investments. So every family office have a different investment focus and a different sort of package of services that they offer either to the single family owner and sponsor or to a multitude of families, smaller families. Sometimes families could be hundreds of millions, not large enough to form their own family offices, but they may join a multifamily office that's backed by a multi-billion-dollar family and larger families as well. So family offices in some could really run across a wide gamut in terms of size, strategy, and focus. Someone once said, if you've seen one family office, you've seen one family office.
Okay. Now, according to a Preqin report, family offices' PE allocations were the highest of all PE investor types. So what is driving their interest in PE?
Well, since Dodd-Frank, since the financial crisis, families lost a lot of capital. And they became more interested in direct investing and co-investing, more active investors. So also at the same time, you've had a lot of institutional asset managers, institutional capital dried up, and a lot of asset managers are now looking for families to provide early stage capital. Some of these large asset managers, independent asset managers, left the larger banks and the asset managers to form their own firms. They're looking at families, they're offering creative, customized investment platforms, pledge funds, co-investment platforms, managed accounts. There are lower fee structures, things like that. So they're doing that. Also, there's a lot of emergence of family office networks and associations where families can educate themselves, have more direct access to deal flow, share ideas among themselves, educate themselves about how to do due diligence, about different industry classes, and also meet people. They need to hire sometimes in-house investment professionals so they have the capability to invest directly, to source, execute, and manage deal flow. So all of these things have led to family offices being more involved in PE, more early stage investing. Whether it's co-investing, initially they may leverage off of the manager's expertise and infrastructure or do more direct investing. Importantly, families are also more open to investing with managers with shorter track records, smaller AUM, and niche strategy areas. We do a lot of investment funds and sponsors who focus on venture capital, art collectibles, private credit, middle market deals, and things like that. But also families are still active limited partners in funds, and they will invest as a limited partner with the manager with the right strategy and the right management team.
For PE firms that are looking to tap into this investor base, what do they need to do to form and maintain relationships with family offices?
Right. Well, there's several things they could do. Number one, they could take advantage of these technology platforms. And by the way, their families are usually organized around their own vision and values, and they seek to preserve wealth for future generations, and they're very concerned with privacy and secrecy. So when they're using these online platforms, they need to be they're very cognizant of that, and certainly the managers they're introduced to need to be cognizant of that. But there are these platforms that match managers with families, and that's something managers may want to take advantage. Also, I mentioned the family office networks and conference events. That's a good way to build personal relationships. They can also provide families with certain incentives to invest. That's very important. Either lower fee structures, transparency into underlying industries or assets that can help the family learn, or access to niche strategies that the families would otherwise not focus on. So it could be private credit, art, I mentioned VC, those type of things. So family offices are, they could offer those types of incentives. And smaller managers need to also build up their business the right way, right infrastructure, right risk management, proper controls, good disclosure documents, good risk management. They want to avoid overly complex structures or conflicts of interest. So, and then lastly, I would say that families and managers who are looking to tap into the family office investor base need to be patient, need to realize that it takes time to nurture and develop a relationship with a family, and it's more than performance usually takes to get a family comfortable. You usually have to articulate a clear value proposition and how you can be a strategic partner with the family long term. So patience and nurturing that relationship are very important to developing a long-term strategic partnership with a family office investor.
All right, well, Irwin, thank you so much for sharing your thoughts with us.
My pleasure.
I'm Armie Lee. Thank you for watching.